Good evening, Garage Gang. It's Tuesday night. The track's red hot, and yeah, I'm in the black t-shirt tonight. No suit, no teleprompter, no PR-approved script, just raw truth from the garage. I'm Avatar John, your anchor, your translator, your favorite degenerate philosopher with a mic. We talk markets the way they actually work, not the way Wall Street wants them explained. And let me tell you, the charts are lying tonight. Dow, S&P, NASDAQ, all printing record highs. Wall Street's throwing a victory parade like inflation's dead and the economy's bulletproof. But out here in the real world, pink slips are flying like confetti. Amazon just axed 30,000 people. Tech firms quietly trimming headcount again. Manufacturers freezing hiring. Logistics cutting routes. It's an invisible recession hiding behind a bullish chart. The market's revving like a Ferrari, but the engine underneath is running on fumes. How does that make sense? It doesn't. And we're going to break that illusion down tonight. Then comes the headline that dropped jaws across every trading floor. Japan just signed a $550 billion deal with the US. Trump in Tokyo with Japan's new prime minister, calling it the new golden age. That's not diplomacy, that's a power move. $550 billion in energy, AI, shipbuilding, semiconductors. Japan's money flooding into American industry while tariffs hold steady at 15%. It's global chess, and Trump just moved the Queen across the Pacific. Now stack that with this week's timing. Powell meets Thursday. China meets the same day. That's not coincidence. That's alignment. Two superpowers hitting the throttle on the same news cycle. That's a rocket ship waiting for ignition, either to the moon or straight through your portfolio. But I know why you're here. You want the plays. You want the cash. You want the truth behind the noise. And we've got it. Triple X has been in the trench all day. Lulu's back home reading levels like sheet music. And I'm going to show you exactly how the money's really moving tonight. So smash that like, hit follow, and share it with your fellow crypto bros. We're building this garage one subscriber at a time. The charts are green, the block is hot, and the story's just getting started. Let's drop it into gear. The markets look unstoppable on paper. Dow, S&P, NASDAQ, record altitude, flashing green like Christmas lights. Every talking head on TV is smiling, pretending the hard part's over. But under the hood, it's not confidence, it's caffeine and leverage. This rally isn't built on earnings, it's built on hope and borrowed money. Traders are front-running the Fed, betting 70% odds that Powell blinks and cuts. That's not strategy, that's desperation wrapped in optimism. Everyone's acting like the soft landing already happened, like the economy's cruising smooth at 30,000 feet. But the air's getting thin, and the engines are shaking. Here's the contradiction. Every time a company fires thousands of workers, the stock goes up. They call it cost efficiency. I call it cannibalism. Corporate America isn't hiring for growth, it's cutting to survive. Layoffs make the spreadsheet prettier. That's all Wall Street cares about. The illusion's held together by outside money. Japan's pouring capital into US industries. China's quietly running stimulus in the background. That imported liquidity keeps our charts floating like helium balloons. But helium leaks, and when it's gone, we drop fast. Look closer and you can hear the strain. Bond volatility's still high. Repo desks are grinding. Credit card delinquencies creeping higher month after month. That's not stability. That's warning lights flashing behind the dashboard. Thursday's the pivot. Powell steps up to the mic. Beijing fires signals the same day. Two global power moves in a single 24-hour cycle. If both lean dovish, markets explode higher. If either tightens, it's over. The floor disappears. This isn't a rally built on fundamentals. It's a sugar high. And the whole system's running on fumes, pretending it's rocket fuel. The block's hot, liquidity's thin, and the next move decides whether this story ends with liftoff or freefall. So while Wall Street claps for the illusion, the real action's already shifting. Tech's mutating, crypto's twitching, a new market's forming under the old one. And that's where the next chapter begins. The shift is happening right in front of us. While the suits keep pretending the old machine still works, the new one's already online. The merge of artificial intelligence and digital money. Nvidia just hit $200. That's not a stock anymore. That's an economic indicator. When chips move, the world moves. They partnered with Palantir, defense data meets machine learning, and pumped $1 billion into Nokia to rebuild the communications backbone. That's AI industrial policy disguised as corporate investment. At the same time, PayPal wired itself straight into OpenAI. Now ChatGPT can move money. Think about that. Text to payment. You don't log into a bank anymore. You just tell your assistant to pay. That's not fintech. That's a new financial nervous system forming in real time. And it's not stopping there. Anthropic pushed Claude straight into Excel. AI is now inside your spreadsheets. It's the quiet revolution no one's ready for. the office assistant that never sleeps, never gets tired, and never stops learning. This is what I call the new stack. Hardware as oil, data as currency, crypto as the bloodstream. It's the triangle of power that's going to define the next decade. AI builds the brain, crypto moves the blood. Every signal, every transaction, every click gets recorded, tokenized, and traded. And the whole thing runs 24/7. Bitcoin's float keeps shrinking. Only a fraction of supply left on exchanges. ETF inflows rising while retail stays numb. That's not boredom. That's disbelief. They don't understand they're watching the birth of a new asset class. AI capital meets decentralized infrastructure. The merge is here. The world's not moving into the digital age. It's being rebuilt inside it. And the first proof of that new reality just showed up in the form of an old name making a very unexpected move. Which brings us to the next chapter. You can feel the shift when legacy money starts moving. And this week, it wasn't a tech startup or a DeFi protocol. It was one of the oldest names in global finance, Western Union. The same company that used to wire your grandparents' rent payments just hit the gas on a full-on blockchain migration. They're building their own stablecoin on Solana. Not Ethereum, not Base, not Polygon, Solana. Because it's fast, cheap, and it actually works. 50,000 transactions per second. Finality in under a second. Fees you could pay with couch change. Let me explain what that means in plain English. Western Union moves about $80 billion a year across borders. They're the middleman of the world's cash flow, and now they're trying to delete themselves from the process. Instead of paying banks, waiting 3 days, and eating a 6% fee, they mint a token, send it on-chain, and redeem it on the other side instantly. A worker in Los Angeles sends $50 to his family in Manila, and they can spend it before he finishes his coffee. That's not crypto hype, that's the death of the remittance fee. This is what adoption looks like when it's not wearing a hoodie. A 170-year-old company quietly admitting that the blockchain works better than the banking system it's been using since the telegraph. They're not chasing memes, they're chasing efficiency. They're chasing margin. And they picked Solana because it's the only chain that can handle global scale without charging a toll at every turn. What happens when Western Union goes live? Every other payment rail takes notice. Visa, PayPal, MoneyGram, they can't ignore a competitor that clears faster, costs pennies, and doesn't need their permission. That's how disruption spreads. First, it looks like an experiment. Then, it becomes the standard. Capital's already rotating to front-run it. Hundreds of millions flowing into Solana DeFi this week. Big wallets are positioning early, the same way they did before ETFs. They know what's coming, a real-world use case that turns crypto from speculation into infrastructure. That's the crossover point. The moment where old money and new money stop being enemies and start using each other to survive. And while the institutions gear up for their new rails, somebody else is already in the dirt, finding where the next pulse is hiding. Time to head to the desert. And now everyone's favorite part, the money. It's Vegas, late night, neon glow, bouncing off empty tables and tired dealers. Somewhere in the back, at a corner booth in Red Rock Casino, a man in a hoodie and headphones stares at 4 screens. He's not gambling, he's hunting. Charts flicker like slot machines, but this isn't luck. This is data, rhythm, and nerve. He's watching the order books, tracking flow, breathing in liquidity like a poker player reads faces. The plays tonight are fast and sharp. Fun over Solana, 12 million in volume. Liquidity clean, but heavy whale traffic. Trade it small, ride it fast, don't fall in love. Nomu over USDC. Chart looks pretty until you check the holder list. 80% of supply controlled by 4 wallets. That's not opportunity, that's a trap. BOS over Solana. Steady, smooth, built for scalps. Respect it, don't overstay. Every move has rules. 3 losses and he walks. No revenge trades. No doubling down. Discipline isn't optional. It's survival. He's got Dex Screener up, BullX on standby, volume radar pinging. Eyes locked, hands steady. 1 part mathematician, 1 part street fighter. The market's the casino, he says, but I play like the house. He closes the laptop, finishes his drink, and you can almost hear the hum of the city outside. Bright lights, bad odds, and the quiet confidence of someone who already knows tomorrow's game starts again at dawn. The trench is where the noise fades and only the numbers matter. And while the night traders chase luck, back home, another kind of precision is loading up for the next move. Back home, the neon fades and the hum of the garage takes over. This is where the noise dies and precision begins. Lulu's on deck, head of technical analysis, the sniper behind every call we make. The charts are her battlefield, and tonight they're showing a war of momentum and liquidation. Bitcoin first. You can see the yo-yo action clear as day. Spikes, rejections, quick scalps. Every bounce feels mechanical, not emotional. That's the sign of stop hunts. Algorithms chasing liquidity pockets, triggering shorts, flipping long, and sweeping both sides of the book before resetting. She calls it the liquidation dance. You see it when price runs the highs just long enough to make traders feel smart, then flips and liquidates the late entries. Bitcoin's line in the sand right now is around 112,500. Lose that, and it slides fast toward 111,000 even. Break 113,400 with conviction. And the next target is 114,800. Clean air until then. Volume spikes are the tell. If the move happens on thin volume, it's a fake. If it rips with size, the bulls are back in control. Ethereum's playing the same rhythm, just slower. Support sits near 4,000 even. Hold that, and she sees 4,120 next. Lose it, and 3,920 lights up on the map. It's a trader's range, not an investor's dream. Perfect for disciplined scalps. Deadly for anyone chasing emotion. Solana's the heartbeat tonight. Flat all day between 194 and 199, tightening like a coiled spring. If it breaks 202 with volume, Lulu's first target is 205.5. And if that level holds, momentum carries to 210 fast. But a rejection here, back under 197, opens the slide toward 192 and 188. She points at the moving averages compressing like a funnel, the 5, 10, and 20 all converging. That's volatility loading. When they spread again, it moves hard. Cardano's the quiet one in the corner, trapped between 65 and 68 cents, but the channel's clean and predictable. Breakouts from these patterns tend to run about 15% before cooling. Lulu always drops a reminder right here. Entries are math, not emotion. You don't chase candles. You trade confirmation. Wait for a candle to close above resistance before calling it a breakout. You enter on the retest, not the impulse. Same rule on the downside. Let it break, retest, and fail before you short. You don't trade hope, you trade evidence. She says the charts don't lie. People do. The lines show the truth, but traders ignore it because they want to be right instead of rich. Tonight, she's watching RSI divergence forming on multiple time frames. Momentum fading while price holds flat. That's the early whisper of exhaustion. And if you're new here, the woman reading these charts and calling these levels is Lulu, head of technical analysis here in the garage. You can follow her and get the full setups and breakdowns over at gurucryptogarage.guru, the official home for every call, every setup, and every post-game lesson that keeps this crew sharp. The garage isn't about hype. It's about precision. And when emotions start flying and markets lose their rhythm, Lulu's voice cuts through the noise. Calm, clear, and cold-blooded. That's why she runs the charts. And that's why we listen. Oh yeah, don't forget, gang, let